Well, I say he's stacking up his Ponzi scheme against the U.S. government's Ponzi scheme. And the reason he's saying the U.S. government's Ponzi scheme is if there's one thing you can see that has been consistent between Democrats and Republicans, neither one of them has reined in spending. He's saying, let's take the horse by the reins and be the leader and get out ahead of this. Anyone else who's going to adopt our strategy is only going to help our strategy. But if we commit to Bitcoin first, we're going to drive its price through the roof. Everyone else will have to chase, and we'll take that Bitcoin and we'll put it behind our national debt. And we'll have the only viable strategy versus all other countries for paying off our national debt. And it'll make the dollar even stronger than it is today. And so he's kind of challenging us to win. This is a game. First mover has a big advantage. I do think, and I don't mean to be like a Debbie Downer, but if you look at where the money laundering is happening, it's not happening with Bitcoin. It's happening especially with Tether, but also with USDC. There's no way to stop it. The genie's out of the bottle. That money can sit in non-custodial wallets without identity. And so it is the perfect vehicle for money laundering, tax evasion, and fraud.
So let me just set the stage. Trump wins the election. Crypto goes on a pretty crazy bull run. And since then, I think MicroStrategy, which is Michael Saylor's company, I think it's like 3 or 4x since maybe September, even increasing more than the rise of Bitcoin, which recently touched $100,000. Saylor gave a great talk at a Cantor conference. And so, Greg, I just wanted to, get your reaction and then also why this talk was important.
Well, first, just on the political, and thanks, Alec, for I'm enjoying these chats. Trump didn't just win. In this election, 10 million fewer people voted. And of those that did vote, 12 million switched sides. So it's a mandate relative to what we've seen in recent elections. First time a Republican has won the popular vote. And so it really is a time to pay attention to what's the message here. Part of that message is Democrats got to have a hard think about their message. They outraised the Republicans. They had a huge ground game. They had good candidates, and they lost decisively. So that's there. Coming back to your question, the memo is out that there's a new cop in town, and the regulatory environment's going to change. Gary Gensler's already announced he's going to resign the day that Trump comes in. We've seen the candidates that Trump is nominating. They're very clear people that have a pro-crypto mindset. We believe the regulators for the big three regulators, FDIC, OCC, Federal Reserve, are going to change. And it's going to be a different world. And so we're not waiting for that to happen. The markets are not waiting for that to happen. And we're seeing already announcements of legislation like Cynthia Lummis in Wyoming suggesting that there will actually be a Bitcoin reserve of 1 million tokens. And that's a different reality. And so the memo is in, just a question of who's read it. And Michael Saylor has read the memo.
Got it. So, during this hour-long talk, which we will have linked in the description below, he covers, a few key themes. One of these first themes is this idea of Bitcoin as this brand new asset class for the 21st century, sort of as the best tool for society today for capital preservation. Do you want to talk a little bit about that theory?
Yeah, and I want to pay a tribute to all the way back to Hayek, who wrote in 1975 about the concept of private currencies. He thought they might outperform government currencies, which tend to be debased through inflation. And he introduced the idea that government currencies we have today might be like what crypto people call shitcoins. And he's kind of proved that out true. We do have now private currencies that are called cryptocurrencies. And we have seen in the marketplace that there is a US dollar still the coin or the form of money that people want to have when the shit hits the fan. Everything else is kind of inferior. And now we have, since 2008, a new coin to look at, one that has no inflation built in. And so we really have kind of three tiers. We have all the other currencies in the world. We have the US dollar, which is kind of like a reserve currency for the world. And we have a new concept, a new store of value that is potentially superior because it's non-inflationary. And Michael Saylor is all over that. He's bought in 100%, more than 100% if you count the fact that he's actually raising debt to double down on his initial investment. And he has a very interesting argument that all of us should think hard about what our asset mix should be between those three buckets.
Right. I mean, sort of as you mentioned, part of this is mechanical, right? In terms of how money works today and how governments are spending. You have all this new money supply over time, something like Bitcoin, which has a fixed number in total. It should rise, right? If everyone joins in on this game. One of the things you sort of outlined, and again, as I mentioned, right, exactly. One of the things that that I mentioned at the outset is that MicroStrategy has been on this stunning run, and part of it is because Saylor is borrowing more money to buy more Bitcoin. As he says during the talk, the only thing better than Bitcoin is more Bitcoin. There are some remnants, I would say, of the 2021 cycle. I remember when SBF was talking about DeFi a little bit. Things start to sound a little Ponzi-ish. What would you say to that?
Well, I say he's stacking up his Ponzi scheme against the U.S. government's Ponzi scheme. And the reason he's saying the U.S. government's Ponzi scheme is if there's one thing you can see that has been consistent between Democrats and Republicans, neither one of them has reined in spending. The deficits have grown and the debt has grown. And really what he's saying is, his cost of capital is going to be less than the real cost of capital for what he's paying when you factor in the inflation that comes from the U.S. government, whether it's Democrats or Republican, spending more money than they have. And so they have a debased currency. And when you mark that currency against something that has no debasement, he's just doing the math. And to him, it's physics. There's this problem with it. When it goes to infinity, it would mean like all the value in the world is Bitcoin, and nothing else is left. And so at some point, this has to flatten out. But, as Chuck Prince said, when we had the run up to the financial crisis, is the music's still playing. So everybody's dancing. And what Michael Saylor is saying, he doesn't see the end of the song anytime soon. And as long as the music's playing, he's going to keep dancing. And he doesn't think that the U.S. government or other governments have the discipline to stop debasing their currency. And, it's hard to bet against him because, really most countries haven't been. And the U.S. is the best of a bad lot, but it still looks like whether it's Trump or whoever else, they're going to keep spending. Elon be damned.
And I mean, I think for most people, it does feel like that the path for a lot of these countries, the U.S. included, we're sort of on this unsustainable path of spending, government debt, etc. Saylor proposes his own solution to this, and big surprise, it's to buy more Bitcoin. But this is probably the most interesting part of his talk, what he calls the manifest destiny of the 21st century. Do you want to explain that?
Well, I really got to give Michael credit there. That's a great way to mention it. So if one definition of the U.S. history, manifest destiny, is another way of we stole it fair and square. We started with a couple of little colonies. We did these deals. Michael Saylor, he's in his talk about what a great deal it was for the Louisiana Purchase and buying Alaska and, how we got California. There were kind of wars and we were kind of well, this is what we're giving you so we can treat it as an arm's length transaction. But the manifest destiny of the U.S. was basically to kind of disenfranchise everybody else around us as we simply expanded through the continent, paid out some coin, as consolation prize, and basically made this country what it is today. And he's suggesting that we could do the same thing with Bitcoin. To date, there's a little bit of a Bitcoin experience El Salvador, but that's small potatoes. He's saying, let's take the horse by the reins and be the leader and get out ahead of this. Anyone else is going to adopt our strategy is only going to help our strategy. But if we commit to Bitcoin first, we're going to drive its price through the roof. Everyone else will have to chase, and we'll take that Bitcoin and we'll put it behind our national debt, and we'll have the only viable strategy versus all other countries for paying off our national debt, and it'll make the dollar even stronger than it is today. And so he's kind of challenging us to win. this is a game. First mover has a big advantage. And he's suggesting the US, which has sort of fought the crypto revolution under the Biden administration, should flip that and we should play to win. And, he's sort of challenging any other country, any, short seller. I dare you to bet against me. What's the guy that was like behind GameStop? He said, I can be stupid longer than you can be solvent. So even if it is a Ponzi scheme, he's kind of like challenging folks that he can break them. If they're going to bet against him, he's daring them to do. And people that have shorted him, like people that shorted Elon on Tesla, they've paid the price. And so he's laying down the gauntlet.
Sort of makes sense, right? In the days of the Louisiana Purchase, good land is in short supply.
Hey, I'll remind you, when they bought Alaska, they called it Seward's Folly. Nobody necessarily thought that these were, good deals at the time. And maybe we overpaid for Manhattan,
Well, though those turned out to be quite good investments. And, I guess a lot of people would have the same critique of sort of buying some real estate on the blockchain.
Donald wanted to buy Greenland. If he pulled it off, I'm pretty sure there's a lot of oil under Greenland. I mean, people think, oh, this is so preposterous. But just remember, this is the president that tried to buy Greenland. So it's not out of the realm of imagination for something that Donald and the Republicans could get behind. And maybe even some Democrats.
I mean, ultimately, this is about the U.S.'s strategic expansion, right, in one realm or another. And I think, to your point, there is the risk of not being that first mover. If all these other countries end up doing it before the U.S., we could see, a massive wealth transfer in the other direction. So,
and he's also, he's kind of laying down the gauntlet to gold. We're we're going to basically, F you up gold because it's, gold's 17 trillion today, Bitcoin's 2 trillion. He's like, we're going for it, right? We think this is a superior asset for a bunch of reasons. And, it's much more portable. And there is still more gold, and somebody could figure out how to make synthetic gold. And there's risk in gold too. And he's just decided, like, here's a chance for us to corner the market. US, grow up here and go for it. That's Michael Saylor. Love him or hate him.
So ultimately, this is really a story about store of value, right? This is about buying Bitcoin and holding it. You're also operating in this digital asset realm, but more in, let's say, in the on the other side, in terms of medium of exchange, in terms of day-to-day use. Do you want to talk a little bit about your USBC project, which is, by the way, live now and Uphold?
It's live. We're just in the very beginning. And so, at the end of the day, you can't eat Bitcoin, right? So there is a part of life when you got to be out there and, buy your meal, and live. And so for that, regular fiat currencies are pretty good. And the question is, can they be better? And our observation is there is something that comes from the cryptocurrency that could make fiat currencies better, and that's the blockchain. And in the case of the US dollar, we know it's a superior asset for a means of exchange, but currently it lives in all these silos. In fact, it's really hard for people to get US dollars electronically unless you're in the United States. You have a euro dollar, which is an indirect dollar, or down here in Argentina, they have estimated $280 billion of $100 bills, sitting under mattresses, right? A better solution would be if, for means of exchange, everybody had access to those dollars, just like in Star Trek, everybody has credits and they're buying dilithium crystals. Doesn't matter whether you're Cleons or Romulans or the Federation, you're destroying each other's galaxy. You're all using an agreed form of exchange. They're not trading Bitcoin. They have a form of credits. And I think in this world, just like English has become a protocol, the US dollar has become a protocol beyond and bigger than the United States. And there's a better technology set of rails for it to run on. We particularly believe that USBC, which is basically tokenized US dollars issued directly by banks, is more efficient, more capital efficient, more FDIC insured, has Reg E protections, which means you're protected against fraud and chargeback. It has a lot of advantages over stablecoins. Stablecoins are great, but we could get something even greater, which is to use the technology behind stablecoins, but use the leverage of the federal government, the Federal Reserve, the existing banking system, and get the banking system in rather than having them reticently be on the side of the pool or backdoor serving as the reserve for a bunch of fintech. And I got nothing against Coinbase. I'm investor there and I like stable coins, but they're not compliant. They can sit in a wallet with no identity. We could tackle the problems of money laundering, terrorist financing, fraud with a ledger that has identity, still privacy preserving. And that's what USBC is about. So we're looking to stack that up against USDC and Tether and just traditional money. And we're looking to make it super, super inclusive. Everybody should have access to it. And with the new administration coming in and the concepts of open banking and fair access, the concept that somebody should be excluded from that, this regime views that as discrimination. And we are aiming not to discriminate. If something's legal and it's licensed, we're not going to discriminate against it. It's going to be in the system. And it can be in the system compliantly and with all these other protections. And so we're at the beginning of a new era. And so we're super excited about USBC. The store of value may be Bitcoin, but the means of exchange, we think that's going to be the dollar.
And so just to be clear, USBC does exist today, but it exists as a stable coin. This vision of, this FDIC deposit token issued by banks, it is something we are working on for the future.
So USBC today exists as a stable coin, just like Tether and like USDC. But if you take the middleman out, I think folks know that we've bought a bank. We bought Vast Bank. We've made an investment in the Bank of London. We're looking for a bank in Europe. So imagine now dollars, pounds, euros, all running on crypto rails, backed by the banking system rather than fought by the banking system. That's the step. That's the point of inflection we're at. And so the technology is there. There's a change in administration. The memo's out. Question is, can we execute with other partners to move into this new reality?
So let me play devil's advocate, for a moment, because obviously, a bank issued deposit token will have all of these benefits, capital efficiency, FDIC insurance, et cetera. The people in the crypto world, they might look at it a little differently in the context of, well, look, we invented Bitcoin because, the big banks failed. And we like Tether and USDC because they're one-to-one backed. What would you say to those people in terms of, let's say, the capital efficiency benefits of a USBC deposit token?
Well, you could go to that world and not have the banking system, but then you lose the concept of credit. Banks exist for a very specific reason. They intermediate deposits and they put that money to work. If you live in a world of one-to-one, you're kind of going back to the Stone Age. And you might want to have some portion of your resources there, but even Michael Saylor doesn't want to be one. That's why he's levering up. But basically what a bank does is they take $1 in and they can lend 8 out. And that's how we fund growth in our economy. So if you want to basically eliminate growth and go back to basically hard money days, which made it very hard to grow, you could do that. Why did the Brits beat the Spanish in the Great War, like the Spanish Armada? Because they paid for their losses with debt. They had a banking system. And when the Spaniards lost their fleet and they didn't have any more gold, they're like, oh, I guess we can't fight anymore. But the Brits said, well, we'll just borrow. And so the system of credit is with banks and it makes sure that they lend responsibly. And so this means that US dollar can be out there as a means of exchange, and it can also be used to raise money to create credit. That is what all the growth in the world relies on.
And, I guess why not have both, right? Because, you can have your hard assets and your Bitcoin and, now you can have your capital efficient stable coins, but built with 21st century technology.
The stable coins and deposit tokens can coexist, et cetera. And at the end of the day, it'll just be a competition to see which creates the greatest liquidity pool. I do think, and I don't mean to be a Debbie Downer, but if you look at where the money laundering is happening, it's not happening with Bitcoin. It's happening with especially with Tether, but also with USDC. There's no way to stop it. The genie's out of the bottle. That money can sit in non-custodial wallets without identity. And so it is the perfect vehicle for money laundering, tax evasion, and fraud. And so at some time, we're making a bet that more of that technology capability will be used in a way that can address those shortfalls and still get the benefits of what makes USDC and Tether so efficient and desirable today for doing legitimate things, but also makes it very, very attractive to bad actors.
It's really about just upgrading the existing system, and maybe bringing some of those traditional lessons to the world of blockchain as well.
Well, let me put it this way. There's been the last 4 years, there's been a cloud hanging over the crypto and blockchain industry, which has suggested that because there were bad actors, like because of Sam and a little bit of what CZ did, that everybody's a bad actor and the technology is demonized. And there's been a cloud that suggests that any association with this is unsafe and unsound. And it's also been a cloud that suggests that certain industries are unsafe and unsound, not because they are financially reckless. It's just people don't like them. They don't like that industry. And there are people that don't like certain regions of the world. And all those things have been like essentially poo-pooed, frowned upon, shamed. This new reality doesn't want the weaponization of the financial system like that. Look, they don't want crime. They don't want money laundering, but they're not going to prejudge. And in this world, as long as it's legal and licensed, as long as people aren't on the OFAC list, the hypothesis here, they should be in the system inclusively. There'll be controls, but everybody should have a seat at the table. And that's a super, super positive message. And before, the people who were just saying everybody at the table were just like, crypto maximalists. But now we have a chance with this administration to say, if banks don't participate in this, what they are doing is unsafe and unsound. So the narrative is flipped around. So now not participating, not modernizing, that's the unsafe and unsound practice. And so, we're going to be passing that message. And that's what the memo is. It's your responsibility to participate in these more inclusive, more efficient technologies, as opposed to kind of like, burying your head in the sand, looking the other way, and just trying to stuff it down by shaming all those people and painting them with the same brush that CZ and Sam got painted with.
Well, speaking of these more inclusive technologies, USBC is live now. It is trading on Uphold. So, if you can access Uphold, you can certainly participate. And by the time you do see this podcast, Uphold's new reward center will be out. You'll be able to earn 5.25% on your USBC holdings at Uphold. So definitely go and check it out. Greg, do you have any final thoughts?
Just stay tuned. It's early days. January 20th is not that far away. We don't know how much is going to change, how fast, but buckle up. This is one of those points of inflection. And you can probably tell I'm excited and look forward to our next podcast. Alec, I'm sure there'll be new developments between now and then. Thank you.